Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial.
As we talk with Oliver, thoughts here on where we're going with our row crops.
Well, certainly better than how we started the year, which was on Friday, but I always take that with a grain of salt. The first trading day of the year on the last trading day of the week during a holiday season makes it really tough to get a good read on some of the price action. A lot of trade desks and people within the industry kind of out, so to speak, on vacation still. But the first full week, I think, is going to give us a better indication about what these markets want to do. So the bounce back that we're seeing in the grain market, certainly constructive, particularly in that corn market. We're bouncing back to the cluster of major moving averages between about 443 and 445. You've got three major moving averages, the 20, the 50, and the 200. If we can clear those hurdles, I think that opens the door for a retest back to the top end of the range. And if you zoom out, that's really what corn has been doing, right? Trading sideways in a 10, 15 cent range. We're working our way back to the upper end of that, hopefully. If we can break out above there or not is still to be determined. Export's going to continue to be watched closely. Obviously, that's been very friendly and a nice supportive tailwind for futures recently, but we need to see something more to give us that breakout, and potentially that would come from maybe some weather disruptions or at least concerns out of South America. But as of late, things seem to be pretty decent down there.
Okay, and then we get over to beans, and beans have had I know this doesn't sound right, especially if you're a grower and you're looking at these prices, but you compare to where we were a year ago, we're still higher.
Well, yeah, I mean, after the last month or so, we've certainly had morale taking a beating for sure. But again, like you'd mentioned, you zoom out and prices really aren't too far off from where they were prior to that big run up. I think what the recent price action over the last couple months probably reminds producers is that they need to be proactive on rallies. South American weather has been pretty decent. That's been keeping a lid on anything significant. But I think China, coming back to the market, even though it might not be to the level that people want to see or what they've done in years past, the fact that they're back in the market is certainly better than them not being in the market. So hopefully we can get some momentum. The 200-day moving average, that's going to be the first technical hurdle to get out above to really kind of maybe flip the momentum, so to speak. That comes in at 1066 for that March contract.
Okay, Oliver, there's going to be a debate as well for some acres, corn or soybeans, but price isn't the only thing we have to consider. Don't we have to keep in mind input cost?
Input costs is certainly going to be a big player, and with what's taking place over the weekend, a lot of eyes are going to be on those energy inputs as we continue to see some volatility take place in those markets. So absolutely right. A lot of variables heading into the new year, which there always are, which makes it an exciting time of year, not just here in the States, but looking at things abroad as well. All
right, Oliver, hang on. We'll take a break. Be back with more markets on the other side. This is Market Day Report. Sloup is with Blue Line Futures. Oliver, good run here in 2025. Can it continue?
Yeah, I mean, it's off to a great start. That is certainly for sure. Looking at the cattle complex, live cattle, feeder cattle, what was a mostly quiet December turned into a breakout in the first trading day of the year last Friday. We were consolidating sideways. We saw volatility coming in. We saw average daily ranges shrinking. And then on Friday, I think a lot of people going into Friday were probably thinking more of the same, consolidation and a quiet trade. But we broke out above the top end of that range. And I think that really got some momentum rolling. We haven't seen much follow through here to start this week's trade, but certainly a good start to the year. If I'm a livestock producer, I think these are probably some opportunities to look at some downside protection, though. The futures market, pretty high margins, the volatility still relatively high, so I think options are probably going to be the best way to play that.
Hey, I'm just kind of curious here, Oliver. Are we going to see some reallocation here in the market?
Yeah, I think across a lot of markets, that's what you typically see to start a new year. You see people looking to reinvest funds and where to go. The energy complex has certainly been one that we've been keeping a close eye on. It's been really underloved, and rightfully so. Production's been really, really high in the United States. What happened over the weekend with regards to Venezuela, you would have thought that that would have really dropped the hammer on the crude oil market. But the fact that you can't see crude oil trade substantially lower on what would theoretically be bearish news, I think is a silver lining. And I think that indicates to me that maybe people are looking at the energy prices as a little bit underloved at the moment.
Yeah, and we look at what we're doing here in the U.S. I think the latest Baker Hughes numbers have us at 545 rigs pumping, and that's down 44 year over year. Is there some concern, though, if we push prices down to that closer to that $50 level, that we'll start curbing some of our production?
Well, that's exactly right. We've seen the Baker Hughes rig count drop, and I think we got to our lowest level in a couple years too. So you get crude oil down, below 55, closer to $50. You start, ratcheting back some of that production. I know a lot of people thought that Venezuelan oil would come back on the market, but their infrastructure is really not in place too. That's something that I think would take multiple years to really kick into gear. So there's a lot of elements at play. Those rig counts continue to come lower. I wouldn't be surprised to see that put a tailwind in prices.
Yeah, always great info. Hey, Oliver, thanks for coming in. Happy New Year. Oliver Sloup is with Blue Line Futures.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition. All information, communications, publications, and reports, including the specific material used and distributed by Blue Line Futures, LLC, shall be construed as or is in the nature of a solicitation for entering into a futures transaction. Blue Line Futures, LLC, does not employ research analysts or maintain a research department as defined in CFTC Regulation 1.71.